Hi and welcome to Debt Tell. This is Rebecca Bautista and we'll be going over how a secured credit card may be a good option if you're looking to establish your credit history or rebuild your credit score. So we'll be going over what it is, how it may be helpful, and then cover how it's different from other different plastic swipe cards that you have in your wallet. Let's get started. So what is a secured credit card? A secured credit card is a credit card that you prepay and then borrow against. So in other words, what you're doing is you're giving a credit card company a cash deposit of, let's say, $500, and then you are given a credit card that has a $500 credit limit. So why is this helpful? Think of it like the training wheels of credit cards. It has a very low balance, so you can't go crazy into debt because you are with a fixed amount. Not only that, but you can then generate the skills on how to properly manage using a credit card. For people without credit, using a secured credit will allow you to create a credit history because you are in fact getting a credit card. So you are having your payments, installments, etc. being reported to the credit bureaus, which is what is needed to create a credit history. For those who have low credit or bad credit, this is just a card that's easier to qualify for because it's secured. You are paying a deposit on it, so you are less risky. How is this different than a debit card? Well, first of all, secured credit cards are actually credit cards. So when you make on-time payments, they're actually being reported to the credit bureau. With a debit card, it's tied to your checking account, so therefore your payments being made don't get reported anywhere because it's tied to your checking account. With a secured credit card, it's still a line of credit. So once you borrow and then pay it off, you still have that credit available again to you to reborrow again. With your debit card, you are limited to what is the amount of money that is in your checking account. Once that money is gone, well, that's it. It's gone. You have to now replenish it again. So you're not reborrowing off the same money. You are just reloading it. Another difference is that it's an actual credit card, so there are interest rates tied to this. So as you are purchasing things, if you don't make a full balance payment, then you will be paying interest on those purchases. With a debit card, you are not borrowing money. You are using your own money. How is it different than a prepaid card? Well, prepaid cards only allow you to use up to the amount that is loaded on. So think of it kind of like a gift card that you're putting on for yourself. So it's different because it's not tied to a checking account. You actually have to go to a place or a website to then put cash into it. And it's beneficial for those who just don't trust banks, don't want to have a bank account, or to make sure that money doesn't get consistently pulled from their bank account. So generally with a prepaid card, there are reloading fees, as well as some cards have a monthly management service fee. With a credit card, there is generally no service fee on a monthly basis. You just pay interest on whatever you borrowed. And again, with a prepaid reloadable card, there is no reporting to a credit bureau, so therefore you don't actually generate any credit history. How is a secured credit card different than a traditional credit card? The answer lies in the fact that a secured credit card has you paying collateral, and therefore it's secured because you're less risky. What do I mean by that? Well, you paid $500 to get a $500 credit limit. If you don't pay back that $500, then the credit card company keeps that $500 deposit. With a traditional credit card, they are going based off of your credit history, therefore how creditworthy are you, and if you don't pay it back, then it goes to collections because they don't have an asset they could borrow again. So with some secured credit card, there is the option that with a showed history or proven history of paying your balance and not defaulting, that they will refund that deposit, and either that card now turns into a traditional card with a higher limit, or sometimes it just remains and you can just have that card as a backup and continue improving your credit history length, because that could potentially be your oldest card. In some cases, the cards will increase your limit just like a regular traditional credit card, where after some time they're like, oh, you know what, now you have an $1,000 credit hit. We still have that $500 as a deposit. And in some cases, they will actually just transfer you to a new traditional card and then actually refund you your money. So again, it's like a training card, and by using it, some companies can see that you were doing a good job paying it back, and now they deem you credit worthy to go to the next step. Again, not all cards do this. It's dependent again on the secured credit card company that gave you the original card, but some do. How do you get one? Some local banks and credit unions actually offer this. They usually call it a secured student card. Some local banks and credit unions, however, do have ways to get a secured credit card without being a student. So just check in with your local bank. There are also secured credit card companies. There are also regular credit card companies that offer secured credit lines. For example, I know Discover has one, but I'm sure there's plenty others. What you just have to do is just Google online, or you can use a online credit company review like NerdWallet or Credit Karma and just kind of narrow down the list through there. So generally for secured credit cards, the lines are low, between or like up to about $500, but there are some cards that can go up to like $10,000-$15,000. You just have to look into it. Obviously, with a higher credit limit, the deposit needed is going to be higher, so just think about that. For the most part, what you pay in deposit is what's given to you as an available line of credit. However, there are some cards that give you a higher credit limit than the amount that you put in. And please remember that with secured credit cards, there is a interest rate attached. So of course, if you're starting brand new, you'll probably have a higher interest rate. If you have a low credit score, you still probably will have a higher interest rate. All right. Well, I hope you found this video helpful. It is all about, again, secured credit cards, which is an option out there. If you have any questions, please leave a comment below. As always, I am happy to answer your questions either right there in the comments, or I'll make a video on it for you. I hope you have a great day and see you in the next one. Bye.